What if I told you that 90% of traders lose because they skip these simple steps I'm about to show you? So first of all, let's go to step number one. So step number one is you gotta learn the basics. You have to learn the basics, and you cannot skip the basics because those are the structure that you will be building on. That's the foundation of your knowledge of these markets. So you have to take your time learning the basics. So step one is learn the basics. And let's dive a little bit deeper on what could that mean. So first of all, we have the charts. You have to learn candlesticks. How do they form? Their definition and what do they mean? So these are the 4 hours time frame candlesticks. So that means each candle you are seeing here represents a unit of time, which price moved for that period of time. What I mean by that is each candle here represents a 4 hours. So if we go to the 1 hour time frame, that's going each 4 hour candle that you've seen is going to be divided to 4 candles now. So right now, as you can see, each candle is a unit of time that represents a 60 minutes. All right, so that's our first thing. Second thing that is very important is you have to understand the multiple instruments in the market, the tradable instruments, because it's instruments. So we got the Nasdaq, for example, SPX 500, and Dow Jones. Those are indexes. For example, the Nasdaq 100 is the biggest 100 company in the US, so it represents the US economy. Same thing goes for SPX, but in the SPX there's 500 company, and in the Dow Jones there's 30 companies that represents the Dow Jones. Other than that, we also have commodities, which is, as you can see, we have the gold chart right here. We can trade gold if we want, and we also have the forex division, which is currencies. As you can see right here, we have the British pound and the US dollar. So the green candles in this chart represents the price going up for the British pound, and the down close candles are the US dollar. So when price goes down, that's the US dollar actually beating the British pound, and when the candles are going up, it's the other way around. So next thing we have crypto, of course. We cannot forget that. The hype about Bitcoin. We have this chart right here represents Bitcoin, and right now we are on the daily. Let me do the demonstration. We're on the daily candlestick time frame. So each candle right here represents a 24 hours worth of 1 hour candles, which means each candle here represents a day. So let's go back and start with candlesticks, and let me just give you a little bit of information about candlesticks. So let's say this is a bullish candlestick. Let me try to make it look as perfect as possible. So let's say this is a bullish candle that is, no, I need to paint this box. Okay, background, let's pick green. Let's make it as green as possible. So what are the components of a bullish candle? Well, first of all, a bullish candle opens here. So this is where it opens, and that's important because that's the start where the candlesticks start forming. So it opens here, and then it goes down here. That's a wick. If it goes down here and then goes up, and this is the close. Okay, let me just show you a quick. This is the close, and this is the open. Let me just put it in the left. Okay, so this is where the bullish candle opened, It went down here, went up above the opening price, and then at the 59 minute, 1 minute before it closed, actually, when it comes down here and it closes here, this is where the candlestick has finished forming for that 60-minute unit of time. So step one, learn the basics, candlesticks, learn the candlesticks, and then learn the instruments you're going to be trading, whether it's indexes, whether it's commodities, whether it's forex or crypto. So whatever you want to trade, whatever your heart tells you to, whatever. Anyway, so this is step number one. Let me just refine it a little bit. Okay, so we got A, indexes, we got B, commodities, we got C, forex, and we got D for crypto. So that's step one, and now we're going to discuss what is step two. So step two is choosing your trading style. And what that means is there's multiple different trading styles that can be used depending on your situation, your lifestyle, your time zone. So basically trading is fluid. You can pick the right instrument that is in sync with how you live, whether it's time or whether it's because you have a job and you have to be trading a certain time. So we have sessions. I've discussed that in the previous videos. You can pick the time you want to trade, and you can also choose a trading style starting from A. We got day trading, and what day trading is, it's like capitalize. No, I don't know how to write it. It's trading the daily range, and this trading style takes from 30 minutes to 4 hours. And basically day trading is capitalizing on the daily range, daily moves. And then we have swing trading. And swing trading would be better for people who works jobs and don't have time to be on charts all the time. And the swing trading style is good because you will be trading the higher time frame, meaning you pick the higher time frame from 4 hours to the daily time frame to the weekly time frame, and those moves are going to take a little bit of time to form. And swing trading positions could take from 4 hours to a week, meaning you could be holding a position for 4 hours and up until a week for your objective to be reached. And C, we have position trading, which is takes much more patience than swing trading because trading setups for position trading could take from a week to 3 months to form, and it also takes a little bit of time to reach objectives because you will be basically trading the daily candle and the daily time frame and the weekly time frame. That's why it's going to take a little bit more time. So position trading is holding trades for longer than 1 month up to 3 months, and it also takes a little bit of time for you to wait for a position trade to form. This trading style actually would suit people who don't want to be in the markets every day. It would suit people who are patient and like would want to take 2 trades to 3 trades during 3 months, 6 months. So you wouldn't be taking a lot of trades, but this is very rewarding actually. You take a position and you wait for it to reach its objective, and you also got to be patient and hunting for the setups, for position trade setups. So going to step 3, which is mastering risk management. Sorry, I didn't put step 3, mastering risk management. So risk management is the most important thing. It's the most important aspect of trading, because in trading you can play defense. That means protecting your capital, not putting it into risk, and you play offense when you see your setup, when you see your strategy and you're sure and you've tested it multiple times and you know that this is it. You gotta be an apex predator in taking your trades when your strategy manifests. But also you have to manage that risk of not putting your capital into less than A+ setups. Okay? So it's the most important aspect of trading. It is forged with patience and wisdom to only put capital into risk when there is A+ setups. All right, so that's about it for risk management, and now we're going to step 4, which is build a strategy that fits you. Okay, build a strategy that fits you and that fits your trading style. As I told you, you can pick any trading style from here, from day trading, swing trading, or position trading. Let's say you chose day trading. You just feel like day trading would suit you best. You have time to be in the charts and you want to capitalize on short-term moves that happens on the daily. So we take that and we build a strategy that fits our trading style, which is day trading. So basically we would pick a time to be on the markets. And time is the most important thing, especially in day trading. You have to be in line with the institutional time, which is New York time, and there's also opportunity in the London session. So you have to learn sessions first to build a strategy. You have to know which time you have to be on the market and which time you want to avoid the market, such as 8:30 when there's a high impact news. You don't want to be there. You want to be trading after the fact, not before, and not during the high impact news. So build a strategy that fits you, pick a time to be on the market, and test your strategy and refine relentlessly. Excuse me for the mistakes here. Relentlessly. Whatever, I don't get it. And refine. That would be perfect, huh? So, moving on to step number 5, which is practice demo before moving to live, and it's in the title. You don't want to be putting real money into the market without experience, without strategy, without structure, without enough information, it's like diving without a parachute, if you ask me. If you just go straight into the markets without knowing the basics, and not only the basic, the market takes a lot of knowledge and it takes a lot of practice to go in with confidence. And even if you take a loss, that should not faze you. You have to be sort of numb. You have to numb your emotions in trading, okay? There's something called revenge trading, and it happens to every trader. Everyone suffers from revenge trading. We just find a way to manage that. And revenge trading is when you take a loss and you just don't accept it, And especially in us males, we have this testosterone thing where we feel like we can beat the market. That's not logical. Beating the market, how the hell would you beat the market? But that's physiology and that's in us, so that's where revenge trading originates from. So you feel like you're gonna beat the market and you start taking loss after loss after loss, and then you blow your account. So practice demo before moving to live. Don't revenge trade. Don't be emotional. Be numb as much as possible and pick a strategy, build it around what fits you, and test it. You can test your strategy. I mean, on TradingView, let's go right to here, and we would do a replay. And let's say I'm day trading. I would go to the 4-hour charts and see what we have in here. So this is what I qualify as a inversion fair value gap. So I'll be keeping an eye for that, and this would be a great premium level. That price would be nice if it comes here. So from this point to this point, I have to zoom in into the markets and see the perfect time the market would offer a manipulation that would allow me to put a position to get into this area of inefficiency. Okay, so right now we're in the London session. Let's go to New York. So as you can see, New York is testing this inversion fair value gap. So I'm gonna see what 830 would do. This is 8 and this is 850. All right, 830. Okay, so moving on right now, as you can see, 830 created a fair value gap, a discount fair value gap, and it was after the fact that price retested this inversion fair value gap. So this would be a nice trade that I would take, but I would want to zoom out a little bit, and let's take this trade, because you can practice on demo, and this is a great idea if you want to test your strategy. I want to take a 1R trade, and we'll talk about what's RRs in the next video, of course. So I want to be taking a buy position here, putting my stop loss here, and putting my take profit in this inefficiency. And let's say I would risk $1,500, and let's go. Let's see what price does. Boom, straight to the point. So going back, you have to practice demo before moving to live. Don't revenge trade. Don't be emotional. Be numb as much as possible. And there's something that you want to check yourself. If you take a loss in a demo environment and you can't take it, you have to meditate, bro. You have to meditate. If you can't accept a loss in a demo, dude, you're gonna go bazinga if you go live, if you know what I mean. So that's why you need to practice demo before moving on to live conditions. And for the last step is step 6, which is stay disciplined and keep learning. This is the most important step, actually, because stay disciplined, meaning that trading is a journey. It's not something that you are going to learn overnight. And if anyone promises you that they can teach you trading in a week or a month, even a year is not enough to digest and indulge in all the markets and these markets and what moves them and what controls them and how they work. This is a logic, this is a language that you have to practice, understand, get a rhythm for it, get a feeling for it. And it takes a lot of discipline to keep on trying, even when you're not seeing results, even when you are failing, even when you are blowing accounts, even if you are losing money. This is a marathon. It's not a race, because if you try to rush it with all as fast as possible and start putting money and losing everything, you're gonna lose fast and you're not going to give yourself time to recover. So it's better if you envision this as a marathon. It's not a race. Take it step by step and give yourself the room to fail. Give yourself the opportunity to learn and fail at the same time, because you are going to fail and you are going to learn from these failures. So lift yourself up with that and see yourself, envision yourself profitable after 2 years, 3 years, 4 years, you're building that. You're building a foundation, so don't rush it. Don't rush the process. If you stay disciplined and keep on learning, eventually you are going to get there to the destination. All right, so that's about it. I think I covered everything I wanted to cover, starting from learning the basics. You want to learn candlesticks, how they form. You want to learn what are the instruments provided in the markets, from indexes, commodities like gold, silver, platinum, forex like currencies, and crypto, of course. Crypto, you know crypto. Everybody knows crypto. I don't need to introduce crypto. Step 2, choosing your trading style, whether you want to be a day trader, a swing trader, a position trader. Trading is so flexible, and you can be as flexible as trading. If you have a job, if you have obligations, if you have like time blocks or anything, you can design a strategy. Let's go to step 4, a strategy that fits you and fits your time. Okay, and then you want to practice demo before moving to live, and you want to apply risk management in the demo environment, because if you can't take a loss in the demo environment, then trading is not for you, my brother. Or maybe you just need to work on yourself, because I told you that it's a marathon, it's not a sprint. So you have to stay disciplined and keep learning. And that's a wrap.